The economic trends of 2020 reflect the year itself, massively disrupted and impossible to predict. But with the benefit of hindsight, we can review how the economy has reacted to COVID-19 and learn lessons from the experience. Long-standing investment trends are in shambles, the yields on long-term bonds are near zero as a result of RBA's quantitative easing policies to encourage lending. By the end of 2020, yields on 10-year Australian bonds were at 0.9%. On the other hand, physical assets and non-fiat currencies had a booming year. The price of gold increased 20%, and many cryptocurrencies, including Bitcoin and Ethereum, more than tripled their value. This suggests that investors are concerned about investments that are susceptible to inflation and found comfort in investments with tangible, limited quantities. The property market stumbled in the middle of the year but quickly recovered for the same reason. Demand for tangible investments won out in the end. But there were changes to the types of properties and markets which performed. Regional cities and lifestyle destinations outpaced capital cities as homeowners migrated to escape the urban sprawl. Port Macquarie and Ballarat were the biggest winners, but many regional areas experienced growth above 5% last year. The biggest disruption to property markets was in the commercial space, particularly CBD offices. Office occupancy in Melbourne was down to just 7% of pre-COVID levels in October, and most capital cities were sitting around 60 to 70% occupancy levels. With the COVID situation seemingly under control in Australia, a strong economic recovery is looking likely.